Once we need to start an e-commerce business like selling on eBay, selling on Amazon, our first step is normally registering our business and opening an account. In this video, because there are so many options, for example, you can register as a sole trader, you can start a limited company. For example, if you want to sell on eBay, there is a personal account, there is a business account. If you want to sell on Amazon, there is a professional plan and there is a personal plan. So there is a lot of confusion. In this video, I'm gonna kind of explain each and everything, how the business registration will work. So by the end of video, you will understand all of these confusion and you will be able to make a proper decision for yourself. So let's get started. My name is Zenja. I've been selling on eBay and Amazon from past 11 years. I am a full-time seller. On this channel, my mission is to help you make £100,000 every single year in terms of profit. So if you are into that kind of stuff, consider subscribing, because every video you will be one step closer to your goal. So let's do it. So the first option that we normally have once we need to register our business is to become a sole trader or register a limited company. So let's first discuss what is the difference between both of them and which one is going to be most effective, where you're gonna pay less tax and where you're gonna have less liabilities as well. So the difference between a sole trader and a limited companies are normally considered as a separate entity. So you are creating a separate entity which is different from yourself. So it's gonna have their own bank account. You're gonna have to get a business bank account, and all the money that you're gonna earn, it's gonna belong to a limited company. And there are the ways to actually pay that money to yourself as well, which I will explain down the line how does that work. But a sole trader is just like a one-man army. In order for you to become a sole trader, it is very simple. All you have to do, and HMRC normally recommend you, within one financial year. And the term financial year is actually different from year 2022 or year 2023. Financial year starts from 6th of April and then it will end on a 5th of April. So financial year 2023 and 2024, we are currently in 2023 and 2024, started on 6th of April and it will end on the 5th of April. So let's say I've become a sole trader today. I will call HMRC and I tell them, okay, well, I am selling on eBay, I'm selling on Amazon, or I intend to sell on eBay, sell on Amazon. HMRC will say, okay, well, if you will make, in the terms of turnover, not the profit, over £1,000 within one financial year, then this is the UTR number, which is a unique tax reference number, and this will identify your self-employment. It is a different from national insurance number. The UTR number is actually for self-employed people. So they will give you a UTR number, and if you make revenue over £1,000 within one financial year, you will have to declare that after the 5th of April, once the financial year will end. Once you are working somewhere, obviously once you get your pay slip, your income tax, your national insurance number and the pension, everything is already deducted, but it works differently once you are self-employed. So you will have to declare each and everything. You work throughout the financial year, and at the end of the financial year, this is once you make your tax return, and then HMRC will tell you how much tax you actually have to pay. And that is something obviously you can pay in terms of installment, or you can pay in one go. But the point which I'm trying to make, it's not on a monthly basis. So this is the whole part of being sole trader. The pros and cons of being sole trader, first of all, it is very simple. So you don't really have to get another bank account. If you are a sole trader, you can use your personal bank account, but I still recommend try to have a different account even you are a sole trader, where you are making all your business transactions. You're not mixing up with the other income and other expenses, because it will be easier for you just to look at the one bank statement and see, okay, well, these are all the income and all the expenses belongs to my business. So making a tax return will be very easier for you. That's the first simplicity of it. The second, I would say, the simplicity of it is very simple to kind of start. Accounting cost for this one is very less, but being a sole trader obviously comes with some kind of cons as well. Especially, first of all, you have all the liabilities on you. So for example, you take a credit like a business loan or something, and you are not able to pay that back, then the lenders can come after your personal assets because everything is under your name. This is the biggest con which I consider. The second thing, a lot of companies, for example, even Amazon or even eBay, at some point they will ask you to upgrade, or some point they will even probably from the start, they will ask you and they will prefer to deal with somebody who is a limited company. So then it becomes little bit difficult for you to actually operate as a sole trader, especially a lot of payment gateways, a lot of suppliers, a lot of e-commerce like marketplaces, they prefer to deal with somebody who is a limited company. So this is something you're gonna have to keep in mind once you are going as a sole trader. Now the second thing is going and registering as a limited company. Registering a limited company is very simple, to be honest with you. Like, you can do this using Osome. I'm gonna put the link for them inside the description. It only costs you £12 and they will get you a business bank account. They will get you they will register the limited company for you and all the documents, everything that you're gonna need. It is very simple. You can just simply give it to them, pay them £12, and then you can just simply register a limited company. It will be all done for you. So I'm gonna put the link for Osome inside the description. The thing with the limited companies are normally considered as a separate entity. Like, you yourself is a different, and then limited company is a separate entity. It is own institution and you are just like a director of a limited company. So once the limited company will make money, that money will go to a limited company business bank account. So in order for you to take the money out of the limited company, you as a director can pay yourself as a salary, or you can actually take the money out of a limited company in the terms of dividends. So this is the way you normally pay yourself as a limited company. As I said, limited company in the terms of pros and cons, obviously limited companies are set up to scale a business, and then you are making sure like your account is not getting banned and Amazon is not giving you some problem, supplier is not saying what's your company registration number, all that kind of stuff. Everything is registered properly. So even if you have to go through like accounting in order for you to do the accounting and tax return for a limited company, even as a sole trader, I always recommend to have an accountant. Or limited company, it is good to have an accountant. You can again use Osome. I'm gonna put the link for them inside the description. Their plan depends on at what level you are. So if you are making less revenue, obviously they have a different plan, and by using a link inside the description, you will get £100 off. So they will take care of all the bookkeeping, they will take care of all the accounting, so you don't have to worry about any of that stuff. They can register the company, they can deal with the bookkeeping, tax return, all that kind of stuff. Make sure you are complying with all the tax and bookkeeping regulation, and your account on eBay and Amazon, your business is actually complying with all the requirements which they have from HMRC. So this is the thing of a limited company. Now there are certain benefits of having a limited company, like a tax benefit of having a limited company over a sole trader. So once you're a sole trader, the way it works, first of all, you have to keep in mind every single person who lives in UK, they have something called personal allowance. So personal allowance is the money that you can make within one financial year and you pay 0% tax on it. So normally threshold for now 2023 and 2024, if you make up to £12,570, then you pay 0% tax on that one. Now if you are a sole trader and you are only sole trader, you don't have a job somewhere else, if you are making up to £12,570, you will pay 0% tax on it. Any money that you're gonna make over 12,570, then you're gonna have to pay 20% income tax and 9% national insurance number on that one. This is normally the threshold for a sole trader. But if you have a job somewhere, then you're gonna have to combine all the income, because your personal allowance might be being used where you are working already. So let's say you have a job and then you are as a sole trader. At the end of the year, once you need to do your tax return, you're gonna have to combine both of the income, and then it will be decided like how probably your job tax is already paid, but you won't be able to use your personal allowance. So let's say even if you make £1,000 as a self-employment, you won't be able to use your personal allowance because you're already using that personal allowance in your full-time employment. So that's the one thing. But once you're a limited company, there are different obviously options. It becomes more tax effective. So what a lot of people do, like currently I'm a director of a limited company myself as well. So once the money is inside a limited company, we pay ourselves as a salary. So the salary that we pay ourselves, like I'm just a director, I don't have any other job. So the only salary which I'm going to pay to myself is going to be under the income tax threshold. So within one financial year, I'm only going to pay myself £12,570. So I'm paying 0% income tax on that, 0% national insurance number. So everything within the threshold. On the top of that, if I need to take out more money, which obviously 12,570 is not enough, I can pay myself in the terms of dividends. So it becomes a little bit tax effective because dividends only pay income tax. They don't have a national insurance number on them. So normally you can withdraw up to £2,000 worth of dividend tax free. So anything you will have to pay to yourself after £2,000, you will have to pay only income tax. So obviously income tax is not higher as a 20%. So that's a benefit of really where it becomes more optimized in the terms of tax as well. So even for the people who are like a family business, for example, you are somebody, you can hire your wife to actually help you out inside your business, and you can use their personal allowance as well. So if you're two people like a couple and you're combining, like one is a director of the company and the other one is the secretary of the company, for example, your wife or your husband is a secretary of the company, then you can use their personal allowance as well. So this is the way 12,570 for you will be tax free. Then your wife will be able to withdraw, your husband will be able to withdraw 12,570. On the top of that, both will be able to use the dividend tax allowance as well. So once you're a limited company, it becomes very tax effective. It really get optimized for the tax. Limited company, whatever the money will be left inside the limited company, you only pay corporation tax on it. So corporation tax changed a little bit. It depends on how much money your company will make. It starts from 19%. It go all the way up to 25%, depending on at which brackets you will fall in. So what I recommend, like my final words will be it. If you are somebody, you are trying to sell your business, and that's like I mentioned, sell your business, the other point which came into my mind as well. Normally, if your business is a limited company, then down the line, if you need to sell your business, it becomes very easier because the person who is going to buy your business, is very easier for them to really understand how much money your business is making. So now today you are director of a limited company. I have a limited company. Down the line, if I need to sell it to someone, for example, to you, then I can just you can become a director of a limited company, and then you will have all the controls of the business that the limited company is actually running. So this is the way you will be able to sell the business down the line. In my final words, if you are somebody who is taking your business seriously and you don't want to deal with the problem like your supplier is asking you something like you don't have this number or you don't have that number, and you want to make sure that you are complying with all the tax requirement and you're setting your business to scale it, then limited company is normally a really better option in the terms of scaling a business, in the terms of liabilities, and in the terms of actually optimizing your tax, paying less tax legally. So make sure you check if you need to register a limited company. Make sure you check Osome inside the description. They also help with accounting and bookkeeping. I'm going to put the link for that inside the description.